Hey, hi guys. So we are going to be talking about algo trading in this session, and algo trading is something that is picking up a lot. I recently did a course called EPAT, which taught me a lot about how financial markets behave, how to use markets data, how to use technology and tools to work with algorithmic trading. There's a lot of things to learn and talk about, and these video series. This is an introduction video, but I'm going to do a lot of more videos which will subsequently come out. And in this video specifically, I'm going to be talking about the overview. It's not just about learning cool strategies in Python. There's a lot of different stuff that you need to know. For example, backtesting, figuring out the right trading platform, how to even get the data, how do you select data, how do you select matrices and things like that. So that's what the conversation is all about. Guys, we are back. I've made a quick mind map and we'll just go through that. So algo trading has lots of different components. The first being ticker markets and orders. Now, within ticker markets and order, let's try to understand what these different components are. So, there's just three that I've mentioned. There's probably more that I can put. So, ticker is the smallest element. It's basically the stock that you're trading in. Market is you're basically trading. So, you could be trading in derivatives, you could be trading in options, you could be trading in stocks. Markets is where you trade. And order are basically the things that you use to trade. So, orders could be your day order, your CNC orders, your market orders, and stuff like that. So these are foundational elements. Before getting into algo trading, it's a very good idea to gain a nice understanding of these three concepts as to what they are. The next we are going to be talking about is one of the most hottest things on the market, right? Technical analysis, fundamental, and quartz. Now, what are these? We are not going to take a deeper dive into any of them because that would be probably a semester worth of course. So let's just take a look at how these three are different. So technical analysis will focus on probably indicators that are mathematically derived. They a lot of times overlap. It could be things like simple technical indicators like moving averages, exponential moving averages, time following methods, or probably statistical methods like Bollinger Bands and stuff like that. So technical indicators are really useful and ground level for setting an understanding of the stock market data. The core assumption being that all the information that is required about the stock price is within that data itself. You don't need anything else. And that's what the technical analysis lays its foundation on. I am not a technical trader. I'm just giving an idea about what that is. Fundamental analysis is more deeper. It goes into the sound understanding of the business. It goes into the understanding of how the balance sheet looks like, what is the cash flow, what's the profitability, what's the debt, how's the ROC, how's the EBITDA, those a lot of maths basically. But this is for somebody who understands the business and that's the philosophy behind and go deeper into it. And once you understand fundamental analysis, you are probably going to go into a much longer term. This is where the trader versus investor mindset comes in. Quants, I feel, and this is a personal perspective, is somewhere in the middle, right? Quants relies on a lot of technicals, but there is very good solid backing into for fundamentals. What you do is you use stats and you build strategies. For example, like a golden crosses, when your short-term moving averages goes over your long-term averages, right? So quants techniques are very grounded into stats. They are back tested over a period of time, and we'll talk about that in essence. So, a knowledge of all these three areas is, I believe, good and helpful. Moving on, so we have the cool part, right? The tech part, which a lot of people are fancied about. There's a lot of tools in the market, technologies. Let's take a look at just what these are. So, trading platform, right? What are the trading platforms? These are places where you go and trade. Most common examples: Zero, Dhaka 8, Grow, Shunya. A lot of these on the market. And these platforms are where you basically go and execute your trades. There's a lot of trading platforms which is desktop based, like Upstock. No, not Upstocks. I'm forgetting the name, but these are more like desktop based applications which direct connectivity to exchanges or provide much faster data. For example, you could have access to level 1, level 2, level 3, level 4 data. You could have access to the order book, the number of options available to customize the setup, and it's basically made for a trader. It's not made for people like me. Then comes Python, right? Python is something which is hot. Everybody thinks that, hey, you learn Python, you're going to go tab at algo trading and make a lot of money. Don't do that. Python is basically, just in a nutshell, a programming language. What you do with Python is You just use a language, you code out what your intent is. So you pull data from different places, like Zerodha APIs, Upstock APIs. You put it in there, you do some analysis in your code, and you basically figure out a way to get the signal. A signal, when do you buy, when do you sell? Libraries, now Python sits on top of giants. Giants are these libraries. For example, Yahoo Finance, everybody uses them. Then, for example, you have another library called Zipline. Then there is PyQuants. There's a lot of different libraries which do and perform a lot of specialized functions, and that's basically in Python. So you use these tools and technologies in conjunction with the trading platform to be able to achieve the goal and generate the signal that you have. Moving on, strategies, risk, and portfolio, right? This is a big topic. I'll probably want to do a more deeper dive into it, what I've learned. Strategies, as I started by saying, is basically what's the method and what's the technique which I think is going to give me the money. So, what's the calculation which I want to design? What's the pattern which I have noticed? And there's tons of different ways to make strategies. It could be traditional techniques, there's mean reversion techniques, there is momentum techniques, there's variance based trades. These days a lot of modern techniques have come up, like machine learning based techniques, reinforcement learning agents. So that's what is strategy. Along with strategies, most people believe strategies are the cool part, yes, but I think the cooler part is the risk and portfolio. They go hand in hand. Risk is basically the risk associated with your strategy. So what's your drawdown look like, which is basically how bad or how much money can I lose, what's the percentage over a period of time. So risk is a topic in itself. When you start studying stocks, you study risks at the same time, basically. So do get into and gain an understanding of risk before you make a strategy. Do understand that, hey, what's the risk associated with the strategy? Learn to measure and quantify risk. Now comes the portfolio, right? A portfolio is basically a bunch of stocks or a bunch of strategies working together. I will have 3 strategies which are very aggressive. I'll have 2 strategies which are very sluggish and just gonna compensate for the volatility I have. So portfolio is basically how nicely I have packaged the whole deal so that I remain, well, the goal is net profit, remain positive by some measure, or it is measurable. I think of positivity at a goal, but I think the portfolio management goal would be that I balance out my risk and return. That would be probably the right way to think of it. Cool. Moving on to the last topic in this, backtesting and deployments. Again, 2 simple topics. How do you set things up? There's a lot in the market, guys. Don't fall for the trap of finish an algo trading course and you'll make money. That's probably not a right way to look at it. It's a cool area. Just to give you an insight, I spent about 9 months, which is close to 100 plus hours in learning it. And now I think I don't know anything. So that's basically coming from the fact that 100 hours just are spent into understanding the whole setup. So there's a lot at play. If you want to go deeper into the world, make sure you get yourself trained or take a help from a mentor or somebody who can help you out. Now, one of the best things about quants is backtesting, right? You can design a strategy and you can backtest it, which is basically see how it has worked for time. Now, past returns, and I put this in quote, past returns are not a measure of future value, right? Which means you could have made 100% gains in the previous time, you can't predict. So this is not a forecasting, right? Even if you're forecasting, nothing is guaranteed. Backtesting just gives you the confidence to do it, but at the same time, a lot of people execute paper trades and still burn money in strategies before they get an understanding. Finally, it comes to deployment goal is tied back to the trading platform that you use, the trading platform that you are comfortable with, and it is hopefully supporting your needs, which is charting and plotting, putting your strategies, maybe even the capability to put Python code. There's a lot of REST APIs these days available, and you can do that offline. Unless you are an intraday person or you're investing in longer term strategies, which is weekly strategies, you can even do it manually. So deployment is in an absolutely super fast trade. For example, I have a couple of friends who are now option trader full time. So they'll get up in the morning, have a call, see the strategies are set, and it just executes. So they'll go like 200 trades, 300 trades, sometimes going to 1,000 trades a day. And it's so fast that you can't respond to it. It's not possible for humans to intervene when those trades are happening. You just have to rely on your strategy and your ability to see and validate this beforehand. You could burn or you could gain. Goes either way. The another extreme end is super manual. I'm a laid back user. I'm just gonna buy some positional trades, invest in only or trade in only high value stocks which are gaining some swing, probably because of a global phenomena. For example, we had a great Adani stock which went very high, now is a low, and then we can only speculate if it's gonna go high or not. Or you could probably track events like the annual newsletters that company have, the finance results, and that finance results could probably give you an idea as to how the company is doing, and your strategies could be based on that. So you could be doing any of that. So from an extreme end of algo to a manual, you could be probably in either of the sides. All right. Thank you. That's pretty much what I wanted to talk in this session. Do check out the series. I'm going to do a lot of these videos. I think I got the inspiration from giants in this space to who share a lot of the knowledge. So that's the intent. The channel's name is Cafe IO. So if you probably learned something new, do subscribe to it. Thank you. Cheers.